Chip giant AMD's stock plunged a dramatic 16% after its latest earnings, but it wasn't an earnings miss that fueled the fall. Wall Street is reeling as Advanced Micro Devices, the semiconductor powerhouse, saw its stock crash a stunning 16% in a single day. This isn't just a blip, it's a major event for a company at the forefront of the AI revolution. Investors reacted swiftly, pulling billions from AMD's market value. But here's the crucial twist. The drop wasn't because AMD missed its Q4 earnings targets. It's about what the future might hold. It signals extreme sensitivity in the high-stakes world of chip manufacturing and AI. So what exactly triggered this sharp sell-off? Surprisingly, AMD actually beat Wall Street's expectations for its fourth quarter 2025 results. The company reported adjusted earnings of $1.53 per share on revenue of $10.27 billion, both surpassing analyst consensus estimates. Yet, despite these strong numbers, the stock plummeted. The real concern emerged from AMD's guidance for the first quarter of 2026, which projected a sequential decline in revenue, sparking fears of slowing momentum. The market's jitters stem from a few key factors. While AMD's data center business performed robustly, achieving record revenue of $5.4 billion, much of this growth was already priced into the stock. More importantly, roughly $390 million of that data center revenue came from sales of its MI308i chips to China, which some analysts noted distorted the segment's performance and raised questions about customer concentration. Furthermore, the sequential revenue decline projected for Q1 2026, even if it beats analyst consensus, signals a near-term dip in an industry accustomed to rapid, uninterrupted growth. AMD's stock drop isn't an isolated event. It sends ripples across the entire semiconductor sector and the broader tech market. Investors are becoming increasingly selective, scrutinizing growth drivers and competitive pressures. Companies like NVIDIA, a dominant player in AI chips, are constantly raising the bar, intensifying the battle for market share. While the overall semiconductor market is forecast to grow by over 25% in 2026, reaching nearly $1 trillion, any hint of slower AI momentum can quickly deflate investor confidence in individual players. Despite the immediate market reaction, many analysts still see long-term potential for AMD, particularly in its AI strategy. CEO Lisa Su remains confident, stating the company is entering 2026 with strong momentum, driven by its EPYC and Ryzen CPUs and the rapid scaling of its data center AI franchise. Key events to watch include the ramp-up of new AI products like the MI450 series and Venice CPUs later in the year, which are expected to drive significant data center growth. However, the focus will remain on whether AMD can deliver on these ambitious future growth targets amidst fierce competition. This intense reaction to AMD's Q1 guidance highlights the razor-thin margins of error in the current tech market. Even when a company beats earnings, investor focus quickly shifts to future growth narratives, especially in high-growth areas like AI. For AMD, and for the semiconductor industry at large, the coming quarters will be a critical test of execution and market adaptation, particularly as competition heats up and AI infrastructure demand evolves. This is GeeseReports.